This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever.
Hey everyone, it is me. We are here. Joseph is here too. Say hi, Joseph.
Hey, what's up?
Boom, boom, boom. We're recording.
Good morning, everyone. Hey everyone. Hey everyone. Hey everyone. Hey everyone.
I am recording this on the computer now.
Hey everyone. Hey everyone. Hey everyone. Hey everyone.
Boom. All right. It says it's recording. Boom, 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 boom. I am apparently recording.
The entire bottle of control. They're all exactly the same.
Crypto art, and then what it really is an NFT.
Wow.
Eddie wants to slap the bag.
So this is the next best thing.
DeFi is going to be a bubble.
It's provably scarce.
With Mad Dog.
Crypto, gold, and silver.
Transparent substance.
Take my money, start a war with it.
Without further ado.
Cheers to you, brother.
Get shit done. Because the system has to collapse before that.
My corona.
Cheers. I feel much better now.
Cheers.
Wow, that was heavy.
Boom. Welcome to Blockchain and Booze number 152. Ooh, mystery drink over there. Todd.
The green screens don't work so well.
I know it is pretty funny. Like you start holding it up and it's pretty great. It's to hide the actual drink you're having because our main drink sponsor, Nifty Spirits, will not allow us to show other drinks. It's a joke. Nifty Spirits is awesome, and Sailor Gary is our good friend. Here he is, Sailor Gary. But Rosario right between his legs. Just messing around. I'm very excited for today because we're gonna kind of jump into a nerdy topic that I'm into. But it's fun because it's Rosario's first time on Blockchain and Booze. Todd, it might be your first time on Blockchain and Booze too. I'm trying to make
it's mine. I think my company might have been in there before, but it's my maiden voyage as well.
All right, that's fun. So it's gonna be a good conversation. I just told the chat in the community. Actually, let me throw this out there. If you're watching on one of the live streams, like the Lunar Crush stream or on YouTube or anywhere else, if you go to blockchainbooze.io, it'll redirect you to the DGH events site where you can log in if you have an account or create an account, and you can join the community. And when we're done, you'll be able to turn on your camera and hang out. I told the chat that I'm going to be keeping an eye on it for any questions. And David, who was watching the intro and saw the not financial advice thing, his first question was as financial advice, what NFTs should we buy next? So I'm not going to answer that, David. Maybe you can come on soon and tell us what NFTs we should be buying. And all your metaverse land. David Rankin, who asked that comment, is like our resident metaverse guy. Everything related to the metaverse, we ask him. He owns the land in all of them. He's that guy. So, but Todd represents Invenium, a company we've gotten to know in the sort of digital securities, digital asset space. And Rosario is from a company called Basonic, which we're going to learn about today. Since I don't think we've had anyone from Basonic on before, why don't we start with you, Rosario? Give us your background. Tell us a little about yourself, and then we'll jump into Invenium. And I've got some thoughts and questions. I'm sure we'll dive deep, and it'll be fun.
Awesome, sounds good. Well, first of all, thanks for having me on. Really appreciate it. Good to be here on the other side of the discussion. My background's basically been building institutional electronic trading platform companies as a founder for pretty much my whole career. I started my first company with a computer science professor at University of California. He's sort of a world-known machine learning AI guy, and we did a number of years of research there together, exploring applying machine learning and AI to algorithmic trading. And we ultimately spun all that work out of the university and commercialized it and built a large-scale multi-asset algo trading platform that we licensed to tier one firms like BNY Mellon and Millennium Partners and folks like that. And turns out the quant software space is a really, really tough space. Even if you're doing something really interesting, super hard to monetize. Given that you get basically greenfields and all the super high-end quants that can pay 7-figure license fees, basically build everything themselves. So a bit of interesting experience for me. My last company that I exited right before I started Basonic, we basically built the whole front to back electronic FX trading stack. So everything from front end for building automated trading strategies through the whole order management, execution management, matching engine, liquidity aggregation, smart order routing, tick database, post trade, all that good stuff. And we license that, similarly to very big firms like Cantor Fitzgerald and EDF Man and Tullett and folks like that were running various EFX businesses. I sold that to an investment bank 7 years ago, and basically started diving in deep on crypto and blockchain. And the genesis of Basonic is actually very, closely tied to sort of my experience in FX, where you have this, massive global fragmented OTC market. And crypto is very, very similar. And I'm sure I'll get a chance to come back and talk about what it is that we do and how we got here. But that's my background.
Very cool. Yeah, we're gonna have to dive into more specifics on Basonic. But Todd, why don't you give everyone your background really, really quick? Todd got I put the shine the light on him and he just vanishes. Hopefully he just accidentally. It happens sometimes with StreamYard. You accidentally click something and you end up in a different thing. You end up in a different tab or something. So hopefully he pops back on. In the meantime, Rosario, why don't you? Here he is. Todd's coming in right now. Let's see if we get him on. There he is.
Sorry about that.
It's all good. So give us, Todd, your background and how it leads into Invenium.
Excellent. I apologize about that. I've been having some tech issues over here, so hopefully we can get this right. So do you give an intro on Invenium?
Yeah, I'd love an intro on you and then how it goes into Invenium.
Excellent. Well, thanks for inviting me. Yeah, I unlike Rosario, I come from a very classical investment banking background, so centralized finance, and there's some hard yards for 20 odd years there, and I think I saw the light around pandemic time where really kind of coming into decentralized finance was interesting. Blockchain was really interesting. I spent my whole career on private markets and public and capital markets, and Invenium really is at the intersection of those four. So what Invenium does is we're an operating system for data. We're tailored for private market assets. We're trying to solve the rubric of the data asymmetry between the same public market asset and the same private market asset. So when I heard about the title, Finding Trust and Value in Digital Assets, I was like, great, love to have the conversation, because this is what we talk about all day, every day is trusted data, kind of like trying to find kind of different trust mechanisms to convey, such that we can kind of get that flywheel moving around these assets trading. So thanks for having me here, and look forward to the conversation.
Awesome. Yeah. Let's, I appreciate you being here. Your connection seems much better now. So hopefully we're all good. Rosario, on that kind of, on the title, Finding Trust and Value, right? Can you tell us a little more? Because you told us your background, and you said it led you to Basonic. We didn't dive into what Basonic kind of does as a product. Would love to hear it. And then I think dive more into the topic of where do we find this trusted information? How do we know what's a security, what's not? All these things we probably want to dive into.
Yeah, absolutely. So sort of the genesis of this was, in my prior business in the FX space, we basically aggregated all the global liquidity, and what fueled that business across all of our institutional clients was really tier one bank provided prime broker credit, and it's essentially the core thing that I think there's a lot of confusion about what prime brokerage is in the crypto space, but in the traditional world, it's very much the central part of it that you're buying is or getting with that relationship is really the credit intermediation piece. It's where a bank is substituting their credit for yours so that you can face counterparties, et cetera, without having to face each other directly and have counterparty credit and settlement risk. And then they do all the back end, magic to settle all those transactions and so forth, of course. And I started just thinking about doing a copy paste in the digital asset space, and realized very quickly that you couldn't actually do it because there was no way to clear and settle all the transactions across all of the different exchanges, market makers, and buy side counterparties. And I was learning about blockchain. I'm quite a technical founder, so I had this aha moment at some point where I realized, you could actually solve this problem with pure technology and not need a bank to size balance sheet to provide that credit intermediation function, or any centralized balance sheet for that matter. And so basically what Basonic is at this point is and it started out, we've never pivoted. We used to have another name called OTCXN, or OTC Exchange Network, which was a terrible name. Hopefully Basonic is a little better and a little more appealing. But basically, it's a decentralized financial markets infrastructure platform, and the core value proposition is really around elimination of counterparty credit and settlement risk. And kind of just to give you one anecdote on, how effective this is, the approach that we've taken. We had clients, I think we're the only company in the world that can say this. We had clients trading at high frequency with FTX, literally seconds before they shut off quoting on bankruptcy day. That had no risk and no losses to them whatsoever because of how our technology solution works. So it's quite an interesting thing that we've spent the last 7 years building. That's fully live and in production and quite battle tested on the back of something like FTX. So
there's a lot to unpack, and then you drop that bomb. So now I got to hear more about the product and how that works. So because what I was kind of understanding going in is that you create products that it seemed like provide data and make things easier to understand, but then you're also providing the actual trading mechanisms and things for your clients. So into the crypto world. So if a client is maybe doesn't want to be the one to fully manage I'm going to send my US dollars to FTX, I'm going to purchase this token, I'm going to sell it like this, you guys create an interface that does that automatically. Is that what you're saying?
We're basically, and there's a good intersection actually between the data side of things and private markets and kind of what we do. In fact, I think that intersection will become, a little more apparent even to me as we're in the process of getting our U.S. broker-dealer ATS license with full digital asset permissions, and obviously there's some pretty important things that I think shake out of what Invinium does, for example. But what Basonic is really doing is quite literally eliminating counterparty credit and settlement risk. So we make it possible for clients to basically keep their assets or their collateral in their own accounts at their own regulated neutral custodian. They can then transact across any combination in the aggregate of all of the different retail and institutional exchanges, market makers that stream quotes, and then obviously all the buy side counterparties that are in the network as well. And they can do that without opening any accounts at any of the downstream exchanges or funding any accounts, obviously, without opening up bilateral credit lines with the market makers or doing any bilateral settlement. And all of that transacting that you do is not only riskless from a counterparty credit and settlement perspective, but it's also fully multilaterally netted in real time. So if you go long on an exchange, you buy Bitcoin in an exchange, you sell it to a market maker, you're net flat instantly from a collateral perspective at the custodian. And so it's kind of what we've built. We've spent a lot of time building this, right? So there's a few really important products that kind of take that and make it sort of global scale and appealing to everybody, no matter where they sit in the ecosystem. But the idea behind it is really, eliminating the need for trust to the maximum degree possible without going full DeFi with no AML KYC.
Yeah.
And
so that's where I'm trying to understand kind of one. I was about to make a cop out and say, like, for our audience who may not be as technical, but for myself, let's be real. I wanna simplify it a little bit so I know I fully understand it, right? And I think we can use that FTX kind of trading as an example, right? You have some high volume traders who are using FTX, or at least FTX is the venue for those particular trades that you are enabling through your platform. Sorry, the phone was ringing in the other room, but like phones don't ring like that very often anymore. So my brain was like, a phone ringing?
It's like 1980.
My phone's always on vibrate. Like, it's just permanently on vibrate. It only rings if my wife or my kid's school calls me. So when I hear the ring, it like, I go emergency, even though no one's at school right now, so it doesn't make sense. It was my wife's phone. Anyway, where I'm getting at is, then you mentioned they might, even if they go long, right? You go long Ethereum, they don't hold the Ethereum on the exchange. It doesn't even instantly go to like a hardware wallet or a different place like that. You're selling that position or having a market maker hold that position for them.
It's a little better than that. If you're willing to bear with me, I can give you a little bit of a technical.
Yeah, I would love that. I love the technical stuff in the audience. If you have questions on this, shoot them to me, because yeah, there we go. Crispin just said your audience is a bunch of tech geeks, and we kind of are. I think the fact that I've spent almost 3 years asking these questions becomes a self-selecting group of people who love to punish themselves to try and understand this stuff. We're just nerds for it, so I would love to understand.
Yeah, I'll take a crack at it. So ultimately, one way to describe sort of what we built is a multi-custodial blockchain network, right? So one of the things that we knew to be a category definer or a category leader in this space is we had to be custodian agnostic and multi-custodian and cross-custodian capable. So this was all designed 7 years ago from the outset for institutional clients, knowing that they can't.
There's a lot of forethought to go into building something that's 7 years ago when almost nobody needed that product because they didn't know they needed that product. They didn't even know what they were going to do in this space. So that's kudos to you guys for building it so early.
Yeah, it's been interesting. And it was challenging, right? Because there was nothing to buy off the shelf then. You had basically Ethereum kind of sort of working. You had Bitcoin. So we took Bitcoin Core as our blockchain stack. We rewrote it in Java, and we changed the architecture quite a bit. We made it a multi-ledger architecture. So there's a unique asset ledger per asset per custodian. And effectively, all of the trading that's happening, if you think about the kit that we give to our custodial partners, and we have probably the biggest network of custodians in digital assets today. We have about 34 organizations in it. 25 of those are banks or custodians, including 5 or 6 tier 1 names that I'm not sure I'm allowed to say, and a bunch of crypto natives. But the biggest of the big that are coming into this space, a lot of them focusing on digital tokenization of securities. But basically, the kit that we give them lets them essentially, at client request, tokenize client assets that are sitting on regular general accounting ledgers in the bank or in the trust company, as well as natively digital assets that are sitting.
So there's already another fun wrinkle, and this is maybe where Invenium will come into the conversation. I want to ask about the data and stuff. So they're not just going, I've got this much money or I've got this credit, make this trade into Bitcoin for me or Ethereum, and you have the custodian, the institutional custodian is ready to hold that asset for them after you make the trade, so it's never sitting on the exchange. But you're actually tokenizing other assets aside from the already digital ones for them, or helping the custodians. Like if I'm holding shares in Bosonic, maybe or a company that's maybe pre-IPOing, whatever, there's enough interest there for them to have a value on it, right? And then would I take that I have and go, I'm going to tokenize that so I could take credit against that particular asset? Is that what you're saying?
You can do that, tokenize a non-natively digital security, and we're not super focused on that until we get our broker-dealer ATS license in the coming weeks. But we are tokenizing fiat, any fiat that sits at a bank or any kind of custodian, which is basically.
When you say you tokenize it, do they just like kind of like put it into a wrapper, or are you actually just buying USDC with it or something?
No, so it's really kind of a hybrid, and this is like insanely nuanced around like legal matters and all sort, financial and legal responsibility and all sorts of interesting things, and whether or not you're creating a security or not, and all these things that have to be considered. But basically think about it like a reledgering, but using the minting of an asset on this private permissioned instance of Bitcoin Core, right? So we're doing
you have a fork, a private fork of Bitcoin for what you're doing.
Correct, with some pretty big changes, of course.
Okay, yeah, and shit, there's too many things, and I want to go into invent them, but one more quick thought here, and this still isn't as bad as the week that we had Adam Draper on. I think we were 45 minutes in, and he's like, I think I should finish my introduction. If you're going to make your own private permissioned blockchain, why'd you choose Bitcoin?
Well, there was honestly nothing else to buy, and I liked the UTXO model over the account model of Ethereum, and it was the most trusted thing at the time 7 years ago, right? So the bottom line of what's happening, just to kind of very quickly give you the pictures, because I'm sure everybody's completely lost at this point. You have assets that clients hold at custodians. Doesn't matter what the client is, can be an exchange, can be a market maker, can be a buy side guy. Those assets are reledgered in this way on this private permission instance of Bitcoin Core. Those tokenized, cryptically provable assets are then freely tradable and payable across our whole ecosystem. And we also have all of the trading technology stack. We bought a company about 4 years ago from Bloomberg and some other folks that had a matching engine stack, and that's incorporated into this so that all of the trading is basically real-time, high-frequency capable cross-chain atomic swaps at the custodial level, where none of the assets have to actually move. So the natively digital assets can be in cold storage and hot wallets, whatever. The fiat, or any other asset, that's sitting at the custodian can be traded in this way. And where it gets really exciting, and we can come back to this, is what happens when you do this between different custodians. And we have a suite of products we're rolling out now in production called Cross-Custodian Net Settlement that essentially makes custodian to custodian net settlement atomic between the custodians on behalf of all of the parties that traded between different custodians.
And you guys have I'm assuming that you guys, as the enablers of this, have already received permission and got access to these assets so that you can make those transfers and things. And that's part of your licensing of having a broker dealer license and things like that at a certain point too, right?
Only when we get into securities. So the interesting thing about this is essentially it's peer-to-peer trading that self-clears and settles because of how the technology works. So we're really licensing this technology to all of these different folks, and then ultimately, they're trading with each other. So we're not a counterparty. We don't execute. We're not in the middle of the trade. We don't novate trades. We don't have any balance sheet up, or there's no guarantor here. And then the custodians use our technology to do all the net settlement calculations and automate all the net settlement movements. So it's kind of a really neat thing where we also don't put the custodian in the role of being a counterparty, providing a balance sheet, providing credit.
It's more like they just have these tools and features and pipes to your network. And if I hold my Bitcoin or my US dollars or whatever I have at a custodian and I want to make some trade either through your network with another person or through an exchange, it can happen directly from there without me having to create those accounts and do all those things, because they already have my KYC, they already have my details and all that.
That's right. And then the cross-custodian net settlement is where the layer one blockchain protocol interop happens, right? So we have smart contracts starting on Ethereum mainnet that basically facilitate that custodian to custodian atomic swap. and a whole range of other interesting things that make this work for like proper institutions. So that's kind of at a very high level, kind of half of the story there.
Yeah. So, and then I've got some thoughts, and I think some people have some kind of technical thoughts and questions, but I'm going to kind of table them for a little bit later. But my first thing is, you're dealing with licensed custodians. I'm assuming that every user on all ends of this are KYC'd and through licensed parties. You're not going onto DEXs. You're not building any decentralized features here.
There's decentralized features, but they require an AML KYC kind of wall, right? So so you're right. Everybody gets AML KYC through a regulated entity, right? Just like works like an anonymous FX ECN does in TradFi, right?
Yeah.
And then the DeFi concepts are obviously throughout everything we're building, but we also have a product called Virtual Custodian, where we haven't partnered with an AML KYC provider, but when we do, you'll be able to bring assets from a Fireblocks wallet directly to the network, deposit assets into a layer 1 smart contract, which then get locked and tokenized onto the layer 2, become freely tradable and payable at high frequency without a layer 1 transaction. And then cross-custodian net settlement basically delivers all the residuals back to the contract and the brick and mortar custodian. So you can basically play and have cross-chain atomic swaps with people at brick and mortar custodians.
I tell you, I mean, you would think our businesses are so different in terms of just we're focused on like pretty illiquid private market assets. Call it data rich, low frequency traded assets. You're dealing with a lot more kind of high frequency traded assets. But in terms of the cross chain kind of atomic settlement, cross custodial, we think of the same things all the time. And I have like 1,000 questions for you, Rosario, and we'll probably connect off.
Let's jump in. So from give us a little more detail on the sort of Invenium product. And I know it's a little bit more heavy on data and verification things, if I understand correctly. But tell me in your words, and then it would be fun to see how it's connects to Basonic and what they do, and maybe we create some kind of partnership just right now. I mean, I constantly tell people full disclosure, like this company or that company is one of our portfolio companies. In this case, neither are a portfolio company of DGH. So I can throw all sorts of monkey wrenches and crazy ideas here without anyone saying I'm conflicted. So just saying that.
Nice.
But Todd, let's jump in a little.
Yeah, our flywheel is just to set it up is largely around we think better data leads to better valuations, which leads to better liquidity, which leads to more trading. That's the flywheel we're trying to get at with respect to private market assets. And private market assets, and our view is that every asset, whether it be public market assets or private market assets, will trade and settle on a blockchain rail in the near future. Near possible. It's going to happen because of the kind of like the efficiency and ultimately which leads to the liquidity. So, but if you think of the first two things, the better data and better kind of valuation, that's the kind of the trust side, and then the better liquidity and the more trading, that's the value side. So, I mean, again, finding trust and value in assets, you need data. So, what we like to say is we're the life cycle management for a token, but the data associated with a token. Every tokenization platform and many of the ATSs, they'll have their lifecycle management of the token throughout the life of the token, and that's very important. And from AML, KYC, whitelisting, accreditation, all that good stuff, peer-to-peer. But we're the lifecycle management of the data associated with that token. So, because just when you tokenize something, just tokenizing it doesn't make it worth more. I mean, it's just like an SPV you throw something into when you're in banking. Like it doesn't make it worth more. It doesn't make it more liquid.
Yeah,
but
I'd like to throw out there too to some of the people listening, if you haven't been in the space very long, and right now there's this moment in time. And by the way, Rosario, what is that? The bottle. Oh, nice. Very nice. I purposely have been drinking this because I think that after this, I'm going to have to do a family thing. And this is, it looks like a giant beer, but it's like the half juice, half beer. So it's like only 2% alcohol. So it doesn't really count. And I'm a little jealous of having a good whiskey right now. So, what I wanted to kind of set the stage with was that we're already on second, third, fourth generation of digitizing at least securities. And we can talk about other assets that are digital as well. And I'm actually wondering if Invenium plays in that. Because clearly, based on what Basonic said, people are trading Ethereum, Bitcoin, everything else. So it's not just securities. But where I'm getting at with this is that there was this early moment in time in our space, and it's kind of the same thing that happens in every new novel category where people get excited and there's hype, where people thought, oh, I know, I'm going to take this fund, I'm going to take this piece of real estate, I'm going to take this thing, and I'm going to add all these bells and whistles to it. It's tokenized. And they thought that saying something like that would make it either worth more or have more liquidity somehow. But what they did at the early days of our space is they tokenized it on Ethereum because it was really the only blockchain that existed that could do these kind of things at the time. Or a little bit later, they started using private blockchains like Hyperledger Fabric or something like that. But at the beginning, people were using Ethereum. And to trade a security, there has to be some certain things like KYC, like the whitelisting, all these things that Invenium participates in and helps kind of do, and Todd will tell us more about. But you have to do all that stuff, right? Things that you kind of do offline. When if I go to Rosario and I say, hey, I want to invest in your company, there's not a lot of paperwork to do when it's private. Once it becomes public, there's a ton more paperwork to do. But when it's private, he can send me literally a 3 or 4 page piece of paper, like a convertible note or a safe, or even a price round that might be like 7 or 8 pages worth of writing. And I docu-sign it or I sign it. And I basically say, I agree that I'm an accredited investor. I agree that I'm not on any of these lists. And depending on his lawyers, I might have to show some verification or not. You know, most private rounds of funding, it's basically signing a piece of paper. And the second I wire the money, the deal is done. But people brought that online. Bringing it online, like with DocuSign, things like that, okay, makes it a little more efficient. But when they brought it on the blockchain, they actually shot themselves in the foot for a lot of the deals, because it went from, hey, I want to invest in this company or this fund or this piece of real estate, which is, you know, an annoying paper transaction, but a little more than annoying is probably as bad as it gets. And you made it where it was like, oh, we have to do the KYC information. You have to trade it on this particular platform. You have to learn how to use a wallet for this blockchain, because even though the token is a security, and if you lost it, it would get burned and reissued to you. Otherwise, it's not a proper security anyway. All these things, all these extra bells and whistles actually made it harder to deal with. And then the company who tokenized this thing would have to pick one of like 3 or 4 exchanges that existed, like T0 or Open Finance, or one of the ones that existed back then. There weren't very many. Polymath was one of the early first ones. And it was pretty cool what they built. And it was very foreshadowing, but it was not usable compared to what it needed to be. And it like put a piece of paper that would be a pain in the butt that required maybe a lawyer to look at and help you deal with. And that's the, you know, the biggest hurdle and annoyance of it. And you made it like way more complicated and harder. You actually did the opposite of what you wanted to do. You made it just like, you know, insanely hard. It's like saying like, I bought this car, but the only way to drive it is with these keys. And by the way, we're standing on the sand of the beach and I'm going to chuck it into the ocean. If you find the keys, car is yours, right? Like that's kind of how they made it. Like they made it like not impossible, but really, really hard to deal with. And over time, we've gotten to where we are today, where you can actually, there is these ideas, atomic swap, just the idea of an atomic swap for a security is like mind-blowingly cool. And now you're actually taking all of the things that the blockchain can do, but also just digitizing can do, and making it easier to transact. And I think that, you know, both of these guests are enabling some of those things. But I just wanted to set the stage, because when people talk about tokenizing something, it sounds so cool and it sounds like it makes it better. And what you were alluding to, it doesn't always do that. Now, there are some pieces of data I've dropped, and we've had a few folks here that that have heard this before, but just throwing it out there, like we had David Wield on here before, or maybe it was on one of the other things, like one of the events, like Security Token Summit or something. But David Wield was one of the he was the co-chair of NASDAQ or something when I first met him. He's like the father of the Jobs Act. He's one of the guys who created the legislation that created the Jobs Act to make it easier to transact and do public solicitation and kind of this modern way of crowdfunding, but also just online investing. Super smart guy. He explained to us that when bonds went from calculating the interest annually to quarterly, the bonds that did that traded at a premium. They were actually worth more. And then he started saying, well, what happens when it becomes monthly? What happens when it becomes daily? What happens when it starts looking like these DeFi products where the interest is just calculated on the spot and you get to watch your wallet just cent by cent go up in value, or maybe fractions of a cent. But that's really exciting. And those products will use the blockchain, will use digital and make them actually worth more. Okay, Todd, sorry for the diversion, but I wanted to kind of set the stage because we're now on, version 3 or 4 of these blockchain products that are now starting for the first time, actually making these products more liquid, more easily tradable, to enable the kind of stuff that Rosario is talking about. That's why I said the thing when he said 7 years ago we started working on this. It's kind of mind blowing because 7 years ago people didn't use the word security token yet, right? Like 7 years ago, the word blockchain started to be used, I think, in 2015. If I remember correctly. It might even be 2016, but it was the first time it was in a documented case of using the word blockchain in I forgot what it was. It was like in a university study or in like a published research report. It wasn't until 2016. So if you just think about like that, how fast these things go.
Yeah, I mean, our view is that, even to tie this in with what Rosario was talking about, like we need venues that are tied together. And then Rosario mentioned he was applying for an ATS. God bless. I mean, we want 1,000 ATSs, and we want them all tied together in some way, shape, or form. And
ATS stands for alternative
trading system. And to your point, Todd, I mean, the reason why the value is not the ATS itself. It's actually the ability to clear and settle all the transactions across all the ATSs with all the native fiat on-ramps across all the custodians that are giving people access to this stuff, right? That's kind of the core thing that we're focused on, right?
And again, I think the world kind of like it has some pattern recognition to TradFi. I mean, back in the late 90s, early 2000s with the ECN networks, I mean, there's 7 or 8 of those, and then they kind of tied themselves together. Several of them tied themselves together. A couple of them went on their own, and then when Reg NMS, the national market system, came out, like the ones that tied themselves together, they were the winners. I mean, the other ones kind of merged in, and I think we'll see a similar evolution. And we always talk about evolution and not revolution, so we're far from maximalists on this stuff because we live in the world of securities, and there is a book of Hoyle associated with it. So I think we know what steps to take, but we spend a lot of time just really trying to figure out how can we stitch that network together and help and bring community to help bring that together. And I know, Alon, you have some association with Onera. We love what they're doing. They're an orchestration layer, and they help bring a network and community together. And what we want to do ultimately is we want to be that data layer. We want to be that decentralized Edgar database behind every security tokenized security that trades. And then we want to be able to just do that digital lifecycle management of the data as these.
That's interesting. Okay, let me think about this from the perspective of the audience, right? The Edgar database is a database of all securities that are at least reportable or that do report to the SEC or FINRA. Is it the SEC or FINRA that kind of?
It's SEC, actually.
The SEC. And the Edgar database is where you get the data of, this institutional investor was a part of this round. Sometimes they show that. It depends on the data. But if you're doing a round that has to be publicly disclosed or raising a fund, for example, like you could look at the Edgar database when we decided we were going to launch the DGH fund, our lawyer had us file some paperwork and put that database in there, and it exists in the Edgar database. For lack of a better, not so great because it's not as detailed analogy, it's kind of like, the Ether scan for securities, for public securities.
Yeah, but I would say all Edgar Database is, it's a centralized trust mechanism. And so the reason you buy stuff is because you trust what's on the other side and what you're getting. And when a company goes IPO, Amazon's different. They're a public company. You can knock yourself out and look at their SEC filings, but there's 20 research reports and you're going to probably look at those. But if it's an IPO, something that's really just come out, you kind of look and say, wow, they've gone through the IPO process, SEC trust process. Oh, they have a Deloitte & Touche valuation trust process. So what we're trying to do is recreate that for tokenized securities. So think about you fractionalize a piece of commercial real estate or private equity or a piece of infrastructure asset or a piece of private debt. Like you need trust mechanisms to look at, and when you go to the Coinbase token kind of listing and you click on it, you need to be able to go and find some trust mechanism, and that's what we're trying to do is provide trust in the data and then provide oracle mechanisms to provide further trust in that. Those oracle mechanisms could be third-party validation. They could be through a valuation agent. If it's a real estate asset, maybe a valuation appraisal from Cushman Wakefield. If it's private equity, maybe it's a valuation from McKinsey or Mercer. It could have insurance associated with it. So there's trust mechanisms that we can pull together here in a decentralized manner. And our architecture is very unique. We call ourselves an operating system for data, but if you look inside our operating system for data, there's no data. All the data, it's all pointers. All the data lives at the place of rest where the issuers own and control that data. They just permission us in. If they don't want us, they can cut us out. So we really promote Web3, really promote data sovereignty, because we really think the issuers and the asset owners really should control the economic rents from that data. So again, think about us as the data layer for private market assets as a trade on digital rails. But again, just linking into what Rosario was talking about, we're very attuned to how these things are going to trade. So for example, investor issuer on exchange, call it Oasis Pro. Issuer B wants to buy something, but they want to, and then maybe the blockchain that issuer was on was Solana. And an investor B wants to buy it, but he wants to settle on Tezos. That is a cross-chain settlement that has to occur, and typically via custodian. So there needs to be custodial kind of a cross-custodial, a multi-custodial blockchain network, like Rosario's that has to service that. We're focused on that as well, and making sure that we call them like adapters. Because remember in Swift has certain adapters, and that's kind of what we're talking about. Some of this stuff is wrong.
Yeah, I think you're cutting out a little bit, Todd, but I think that those adapters, I think it's kind of like you were saying with Swift and the terminology, but I know that like Onera, for example, has built an adapter towards Tezos and some things like that, and hey, Frank from Invenium is in the chat too. So people, by the way, if you're in the chat, you can ask Frank questions. He's there with you guys. But what's really interesting when you talk about the cross-chain stuff, you kind of have to follow these things, because even if you do it, there's a paper trail just on chain, and when you do cross-chain bridges and things like that, there's all these extra implications in these places, and it's really interesting to follow. And I kind of mentioned the sort of ether scan for these things, but there isn't a great place as of yet that I know about that kind of is like a cross-chain ether scan. I have an idea of a company that might be doing it. But when it comes to securities, there's a whole different layer. Then there is also the privacy issues and the permissioned issues, and some things might the transaction data might be public, but it doesn't necessarily mean, Todd made the trade with Rosario, and Rosario was, like you said, on Solana, and Todd was on Tezos. By the way, Kevin in the chat is the first person to launch a cross-chain bridge from Ethereum to Tezos, and I made the first transaction on that bridge. Just throwing it out there.
I'll just first, I know we talked a little bit about counterparty risk to start with.
Yeah,
I would argue that cross-chain settlement is the new kind of counterparty risk, if you will. I mean, counterparty risk is a massive risk in traditional finance, and people don't understand how big that risk is. And Rosario probably knows that really well. But I think the digital equivalent of cross-chain risk is possibly cross-chain settlement, because there's counterparty risk, if you will. You got to know your smart contract. You got to know your bridge.
Yeah, I mean, cross. So my whole view on this is that we've created basically a type of cross-chain bridging that doesn't have the same risk profile as like a particular, layer one native cross-chain bridge, which has insane attack, and other security sort of vectors that you are obviously, given all of the hacks and all of the losses, are pretty unknowable at the moment. So if you think about just think about this concept. So first of all, Todd, taking your all this off-chain data, aggregating that in some way where people can trust you guys as a source for all that off-chain data, bringing that, doing the life cycle side of things and all that is critically important. It's how people get comfortable with, to give you an example, in the FINRA in our application process, they're like, well, when you do list a digital asset security, where are you going to, where are all the offering documents and all of the different, items that go with sort of the disclosures and all the data that you're talking about? Where is all that stuff going to live? And our answer to that is, that we don't handle that, right? So that would be something that we would link to for, with somebody like yourselves. We're really facilitating just that ability for anybody with assets. If you think about this institutionally, anybody with assets at any regulated custodian being able to do an atomic swap for any other asset, natively digital or not, at any other custodian, and actually have a way to settle that where you don't need the classical cross-chain bridges you guys are talking about. You do leverage smart contracts, but obviously with a much more knowable kind of sort of security and risk profile. And and I think that that really becomes critically important to bring the whole thing together. As Todd pointed out, I mean, the value is really in that multi-custodial blockchain network where you're, and ultimately where I think all the money is going to be made. And I think this is just worth mentioning, because in our cross-custodian net settlement working group, the big banks that are in there, they're coming into crypto custody too. They're going to custody natively digital assets that are issued, as securities on public blockchain protocols too. But those are all things that I think are being slow played. Where all the money is going to be made, in the next 5 to 10 years, is the tokenization of non-natively digital securities as those things sit at the CSD, at the custodian, with the transfer agent, those ultimate record of, the recordation of ownership that sits with those types of regulated entities that one public blockchain in terms of finality of ownership. Yeah. How do you make those things freely tradable and payable and usable as collateral, where you can manage that collateral in real time and do this between all of the different counterparties that are across a global network of custodians? That's where this kind of starts to look like Swift /DTCC/CLS, in the FX world, in terms of what we're building and how we see that all playing out.
It's such an interesting, dynamic, right? To jump between, the different chains, but then talk about regulated assets and talk about these things, because I think some of these things that are so complicated to do with regulated assets, I think that what Rosario is doing for the trading part, the high frequency is probably the toughest and craziest part, the speed, making sure that you do it right, making sure that you don't hold anything on one of those centralized exchanges for very long, if at all, and all these things. That's the complicated part, the volume and the speed. But when it comes to regulated securities, there's a whole extra level that probably doesn't really, the speed matters less, but the execution and the KYC and the regulatory hoops you jump through have to be airtight. But it's kind of funny to think about when you talk about like making an atomic swap amongst two accredited investors who have things that they want to trade with each other should be the easiest, simplest thing in some ways, right? Because we use DeFi all day long. I can, you know, we had Lunar Crush on when they launched trading. And again, this might be a record of the longest time it's taken me to mention Lunar Crush, by the way. I mentioned them as streaming at the beginning, but Lunar Crush is one of our earliest portfolio companies, and I'm on the board. So I'm totally a fanboy as well because I actually use them. But they launched trade, and they launched trade with like 5 or 6 blockchains enabled. And they're not just the EVM chains. They also include like Zilliqa and Bitcoin. But I know that I can use an asset on Zill and swap it immediately for an asset on Ethereum using their product because I've done it before. I've tested it. And, it's not instant because going cross-chain, you have to wait for some verifications and things like that. But it's like pretty damn fast. And it's totally doable today, right? Like when we go onto a product like Matcha on 0x, I can swap any single asset they support for any other single asset, and it will not just, it might not go cross chain, but it'll go cross protocol, cross exchange, and it'll be smart enough to, this is something that Total, pioneered at the beginning. So maybe we should have like David Blesnak on to talk about it, but you can route those trades where if it's like above a certain amount, it'll know that I hit a certain limit of liquidity on one exchange and take the other portion of the trade, go to another exchange, take another portion of the exchange and buy a totally different asset, knowing that then they could swap that asset on another exchange for what I wanted. And once you get into a trade that's more than, like $1,000 worth of a random token, it'll start routing in the craziest ways, but it'll happen practically instantly in the same Ethereum block, and you just get the assets you wanted. But if you go and look at where it was actually routed to, so like these super complicated DeFi products exist, and we're kind of like now finally utilizing that technology for regulated assets. It's really wild.
That stuff.
In regulated assets, I mean, what's going to happen is, I spent my whole career, many parts of my career in securitization. And I think blockchain is just going to disrupt securitization like there's no tomorrow.
Yeah.
Like when you can abstract away cross-chain and regulatory issues, you're going to want to just go risk on Seoul multifamily, risk off Miami retail, risk on New York kind of office, and these things are just going to trade like this, and you can just create your own risk profiles. And that's the beauty of where we're heading. But like that's down the road, and we're just trying to plow a path like today, which is it's just quite fun, but it's a lot of hard work these days. But I think we're making some serious progress. Because I think the whole community, even like Basonic and Invinium, we look like very different companies, but if you think about it, there's a lot of similarities where we probably share many of the same ethoses about the growth of the network.
For sure. And I think Alon, there's a lot of really cool stuff happening on DeFi. The reality though is institutionally, you have to get beyond layer 1 transactions. Like there's, to really scale this the way it needs to be scaled, you can't go there. In fact, we have a whole plan around how we're going to actually bring, some of the liquidity where there's AML KYC around it, from DEXs and lending protocols that are online into our network and make it all sort of very seamless. But we kind of came at it from the other direction because it's actually it's for us with an institutional background and kind of, what we know, that's really the place to start, where you don't have these kind of anonymous unregulated pools that have and there are some, like, I just started digging in just along the securities line and along the DeFi, along this kind of DeFi thread. God, maybe we shouldn't drink when we talk about all this stuff. But the one thing that I started digging into recently was MEV, and and if you just look at MEV and you just look at like just the incredible optionality, it's such a fascinating area, and I'm just kind of just getting just diving into it, trying to really understand it. But if you look at the optionality, if you look at how you can I for lack of a better word, you can essentially manipulate transaction ordering, there's front running, there's back running. I just think there are a range of like very serious like securities law issues around
1,000%. And that's well, it's gotten better because of the products have gotten better, but there still is on all exchanges, even if they're not front running, like if people aren't front running, and there's ways to actually trade using certain products where you can prevent that, where they actually, the way they initiate the trade on like in the mempool of Ethereum and whatever, like they don't broadcast the exact trade. Like there's ways of doing it. But even then, there's every single exchange has certain like arbitrage opportunities and bots that are running to keep the prices down. This is what traditional exchanges do too. But what's interesting about it is, again, totally unregulated pools of capital and stuff. But what's crazy is that like we're saying this, and what you're saying is absolutely true. But at the same time, it's perfectly acceptable for a centralized exchange to have some kind of spread on the price, and to have, even if they don't charge a high fee, they actually can, initiate trades and do things at like a little bit of a price spread, so they make more money, and it's legal, and it's
you're talking about centralized crypto exchanges though. So like in the real world, any like the exchanges don't run ARB bots. Like some of this stuff that's going on in MEV is like literally if a price update is going to change the public order book that everybody can see, they actually ARB it themselves and capture the value. And
like if I put in a market trade on a bad older school decentralized exchange, newer ones are mostly better. But if I put in just an order book, if you put in a market order for I'm buying this much Ethereum at this price, there could be a bot that's running that goes, oh shit, on the other exchange or whatever. However, I can get that Ethereum at a fraction, of a cent per ETH, not a fraction of a cent, that wouldn't be worth the trade, but like a certain amount of money per ETH better. And I can pay a higher gas fee, go in front of him, do the thing, and then also include his transaction in a single transaction and only take the extracted value.
Yeah, that's definitely true, but that's a different party doing that, like a participant, like a market participant, right?
Not always. Sometimes the exchanges.
Well, yeah, but that's my point. Like so like I guess my point is like running an off-chain order book that does like proper price time priority matching, where there is no manipulation, there is no front running, there is nobody trading into there themselves. There is all like that that's where we're going to get traction with digital asset securities. Like I'm so bullish on DeFi, and I'm so bullish on natively digital securities. I'm actually really concerned about the reality of whether or not we're going to get any growth based on some of the stuff that I'm seeing that are being baked into these protocols. Yeah. Where people just think because it's novel and it's interesting and it's good for the community, that makes it okay.
It's not always good for the community. I think that if they built in the ethos that is always good for the community, I think it'll be wonderful for the whole space. But it's usually they're building because they can, and it's not technically illegal. Why not run it in this way where we can do a thing? And I'm not talking about like keeping pricing on a new DEX, like keeping parity to the rest of the market or doing anything like that. I'm not talking about like very basic like things that should be done to make the products better. I'm talking about like the front running stuff that people run and do these things. And they're like, why not? Alon wanted to buy ETH at $1,500 per ETH. I was able to buy it for $14.50. He got his ETH, and in the meantime, I made $50. Like, technically, they should have gotten me the ETH at the price that's better than what they quoted me, because technically that's what you're supposed to do. That's actually what 1inch was doing at the very beginning when they first launched their product. Is every single trade they were taking money off the top, instead of what like Total was doing was they would give you a price quote, and if they could beat that price quote, they would beat it, and then there might be some slippage or something, but it was super transparent. 1inch was doing a very similar process, but if they quoted you and they happened to get a better price, the spread ended up in their wallet. Right. Like, and that it wasn't a fair and transparent and right way of doing things, in my opinion. It went against the ethos of the space and the idea. And because of that, even today, I know a lot of people love 1inch. I won't touch it, like, on principle. But it's just, I have a question for you guys, and I know we're kind of running out of time, but it would be interesting to think about it, from your perspective. I don't want to do a dollar amount. I guess I'll just do like a high level, because somebody asked this and I thought it was kind of dumb in the moment. Not that it was dumb in the moment, but I thought it was like too aggressive to ask you guys in the moment. But I do like this idea of asking guests, how much transacting have you guys done in DeFi, like on chain? Like, do you have MetaMask installed in your browser? Do you participate on chain? Are you mostly in the centralized world, or would love to hear your experience on those sides.
Yeah, well, for us, I mean, we're doing definitely have MetaMask installed in my browser, most of my transacting there is very much around sort of testing our own DeFi, related products, right? So the smart contract work that we're doing on Ethereum, I don't know how to, I would post like a Etherscan, like the contract address, but I don't see a way to chat here. But
you know what? Do you have? Oh, here's a good way. Do you have an ENS?
Sorry, a what?
An ENS name? Like, do you have Rosario.eth?
I don't.
You don't? That's okay. You know what's really funny is I don't know how much of it is. I sent somebody their name.eth once, and then they never renewed it. And then later, somebody called them out on doing something stupid, and they were like, "How did they know it was me?" And I was like, "Bro, I sent you your name.eth." And so they looked at Etherscan, and one of the first transactions in your wallet was your full name, first and last name. It was pretty great. Todd, do you participate on chain? Do you regularly use MetaMask?
Yeah, no, I do, but I'm probably like the broader public. In 2020, tons of transactions. 2021 less, and last year everyone's licking their wounds. So
look,
I would say
there's a lot of people in our space. It's interesting that like all of their transacting in our space is trading on Coinbase or Gemini or FTX, and that I think that's okay too. But there was a guy who we all know in our space who, like, a year ago, after years of shitting on DeFi and everything and talking so much trash about everything other than Bitcoin, basically. And he runs a licensed bank, which was kind of funny, but he was fighting for decentralization, is what he was saying, at least out loud publicly. But then, like, after like 4 or 5 years of all of his shit talking on all of these things, he posted on Twitter, like, I just finally installed MetaMask for the first time. It was interesting to finally use it. The product needs, our product needs better, our industry needs better user interfaces. And I was like, wait a second, all these really specific shit talking you did, you never even like did a test transaction or even understood how to do a transaction. Like he said something like about Aave or one of the protocols or something. And I'm like, you couldn't have even used it. Like you're literally just on the surface. It's like watching CNN and pretending like we're as smart as a politician, or not as smart as a politician. I think we're all smart. It's like saying you understand it all because you watch one news source. Like it's not like until you participate, how do you really fully know it? It was just this interesting thing because this guy is one of the kind of leaders in our space, and he was getting the microphone a lot. And so you assumed he understood what he was talking about. Turns out, you know, you don't have to understand something to talk trash and to stand.
That's for sure. That's for sure.
News.
Hey Todd, do you guys actually do the initial sort of natively digital issuance, like on the primary issue, like create the tokens, or you work with folks that do that?
No, we work with folks that do that. I mean, we had been tokenizing in the past, but we work with people that do that. So we're all about taking off-chain data, and what we try to do is bring enterprises to the blockchain with that data and find a way to kind of like kind of handhold them on their digital asset journey. And so we are we're not native, but we think the growth is non-native. I mean, as well. I mean, because we got to bring enterprises to the blockchain, and we're one of those mechanisms that enable that.
That's awesome. Rosario, some of some of my nerdy friends in the chat are saying we'd love to look at a contract address. So if you have a contract you want to share and show something you guys have worked on, I can throw it in the chat. If it's now's not the time, we can share it with them later. I know we're about 10 minutes over time and we got to get moving. So I'd like to give you guys one last round. And I feel like we got to have both of you guys back on. We need to dive into, both of the companies deeper. So we'll definitely do that between now and Security Token Summit for sure in June. But we'll talk about it more. But I'd like to give both of you guys a chance to give a plug. Since we started with Rosario at the beginning, Todd, why don't you give a plug for Invenium, where to get information, where people go if they want to learn more about Invenium?
Yeah, you can look us up on invenium.io. We're on LinkedIn. We have a fairly good social media presence. We have a lot of webinars. Go to YouTube. Go to the YouTube channel. We've probably had 6 webinars so far this year. So we pride ourselves on thought leadership in the industry. So we're there. But we're again, we think 2023 will be a very solid year, and everybody talks about FTX being a really bad thing, and it was an awful thing for the market, but it really differentiates when you think about kind of digital assets. It puts crypto to the left and maybe digital securities to the right. We're all about the regulated securities section. So we're getting a lot of focus, and institutions are really leaning in so far this year. They appear, I say, to have their buying boots on. We know the sales cycles have been really long, but no, we're super excited, and it's coming. It's just a matter of when, not if. We think it all starts with education. So hence that's why we do a lot of the webinars and whatnot. So hit us up. We're happy to have conversations with anybody. There's no dumb questions, and would love to come back. And thank you for the invite, Alon.
Awesome, of course. And Rosario, what's the best place to get info on Basonic?
Yeah, there's quite a bit of information online on basonic.digital and on LinkedIn. We're a little bit active on Twitter, probably not as active as we should be. We're obviously super focused around people that are trading fiat and cryptocurrencies as opposed to securities until we get that regulatory cover. But if you are involved in that market, you should absolutely have a look. There's absolutely no need to take any counterparty credit or settlement risk or use the so-called prime brokers that are out there in the crypto space that don't have enough balance sheet to actually eliminate all the risks. So would love to hear from you. I emailed you that contract address, by the way. I don't know.
Okay, I just saw it on my phone, and I'm trying to see if I can get the for some reason the paste between my phone and my computer is not doing its thing like it normally does. I'm trying to see, but I'll open up my email in the other tab. I always have my email tab closed because I know that it affects the performance of this StreamYard thing. But hold on, I'm gonna reopen.
Yeah, and those are the real money test transactions we're doing now with a couple of custodians, where we're doing the actual cross custodian net settlement, that atomic swap that's happening over layer 1. The core of our infrastructure has been in a long running beta. We've run about $12 billion worth of real money transactions through it in the beta. So this is, used by quite a few number of exchanges, market makers, and institutional clients.
That's huge. That's really cool. It'd be cool to nerd out on this kind of stuff and see how you guys do it on chain and cross chain. I see some wrapped Ether and USDC in this contract. So that'll be fun. There were some questions and some things, and I think that we're definitely going to have you guys come back and dive in a little deeper. It's such a great conversation. I really appreciate you guys both taking the time. I know it's end of the day for you guys, and so I really appreciate you spending time with us, and we'll definitely do it again. Thanks, guys. It was great having you.
Yeah, awesome to see you guys.
Take care.
Thanks, guys.